Hello, this is Vance, and this is March the 5th, 2015. And this is now the reboot of the slow hand method for price action. Now, just to recap, I've been around for a number of weeks. I've still been trading, but I've been going through a couple of things here. Didn't keep everybody up to date. But everything's all settled out. Going to just jump right back on the horse, and made a couple of adjustments or changes over the last few months, but nothing that no one that has been following my channel for some time is really going to notice any real differences. There are a couple of tweaks that I put in. Apart from that, let's just get right into it. As we go over these things over the next little while, you get a better handle of where I'm coming from and so forth. So that's probably the best way to start. So that's where I'm going to start with right now. Anyway, what I've got on my screen right now is the 1440-minute chart. We're trading the April contract. So that's what's up here. But I guess maybe more things I should address is what the decline in oil prices has been, crude oil prices has happened since last November when it really started. I mean, October of last year, we're at $100 a barrel. Now, as of this morning, it's $50.71. So just really kind of take a look at this particular, it's a daily chart. If you look down where the price of oil has been, we had this big major decline from end of November to mid-December. Prices came down to about $55, went down further, touched $45 or $44.16, somewhere in that neighborhood, below $45. And since that time, prices really traded in a fairly range between, and if we just put it at the bottom here, between, let's call it 48 and at the high side, 54. So basically a $6 range. $6.50 range, over the course of the last number of sessions, last 3 weeks, 4 weeks or so. Now, there's a lot of experts. If you take a look at what the price of oil, what's the reasoning for that? Economic slowdown in China, prices are down in that respect. The overall big issue as far as the U.S. is concerned is the production of oil. They're producing a surplus in the U.S. and in Canada because of horizontal drilling and tight oil. And, of course, OPEC nations have not cut back significantly, which they have done in the past, particularly Saudi Arabia. So the price of oil has basically gone from that over $100 down to $50. Now, is it going to stay there? Well, the challenge is that if you look at things like drilling and drilling programs per se in Canada and the United States as far as domestic oil, because I think most individuals agree it's the production of oil in the U.S. and because of the largest user of oil, but because production has ramped up significantly because of new technology, there's more of a surplus as far as oil is concerned. The problem is that technology is expensive. It costs more money than the current $50 oil. Companies cannot make money at this price in North America. It's much more expensive than that. Now, one of two things is going to happen. Either once those companies start shutting in that oil, we're going to return to the less expensive oil that's available. And right now, imported oil is less expensive. So oil that's coming in, I mean, there's a surplus, of course, of production, but now we're looking at issues as far as storage is concerned because you can only store so much oil. Once you get in those tankers, if it's not being used, you can only store so much of it, even at $50 a barrel. So there's the storage. Storage is an issue. You want to use it up as it arrives. You don't want to have a lot of money tied up in inventory. So as a result, there's been the prices decline. There's more oil available currently than there is demand, and that's why the price is at $50 a barrel. How does that equate to trading? Well, it really doesn't. What we're looking for is price movements on a shorter time frame. So the overall pricing of oil, unless you're you're going far out, is really not a real big issue. But I wanted to address it. So the movements and the kinds of things that we're looking for, it doesn't really matter. Whether it's $50 a barrel, whether it's $75 a barrel, whether it's $100 a barrel, we're still looking at the same types of trading. We're looking at our various setups in reference to the slow hand method to try to take advantage of the inequities in price between buyers and sellers. That's what we're doing. And so that has not changed. But I wanted to address the price. So anything we talk about is just going to be on the basis of a shorter time frame. So let's look at today. So this is today's pricing. We look at the opening of war yesterday. Now, just to give you kind of an example, let me go back to yesterday. I marked up yesterday, but yesterday the DOE report came out. There was I think just over 10 million barrel surplus of oil, and look what happened initially. At 10 a.m. or 10:30, when the price, when that surplus came out, price immediately dropped from $50, and in the very next little while, it dropped over $1. You know, it dropped from $50.62, dropped down, and right now, the conventional, as it's been stated, there's more oil in storage than there has been for the last, 80 years. I think that's what they're calling on average, because there's lots of, there's a large surplus of oil in the U.S., and yet, even when we had that 10 million barrel surplus, price only dropped $1.50. We had a surplus last week, surplus the week before in the U.S. as far as the DOE report was concerned. And then once price got down to this level, you can see that it just turned around and marched right back up to over $51. So we had, after 11:30 at the low, let's say just below $50, 49.62, prices up to, made a $2 run. So a very strong trend up after this big surplus that came out as far as at 10:30 on the DOE report. So we're not really, these oil prices, what's the reasoning for that? Why would we have a surplus and the prices find a bottom, a fairly significant bottom? You can see this in this trading range down here, and then kind of launch out of that. Well, there's a couple of reasons for it. I don't know. I don't want to speculate so much. I mean, it's always easy to take a look at speculation after the fact and say, well, could be the reason, that could be the reason. I think more generally speaking, I mean, if I had to make a guess about it, is that we're probably close to the bottom as far as price is concerned. We're below $50 a barrel. But there are those individuals that say that we go further. I don't know. I just think that we're just looking for the price action on a shorter time frame. So let's talk about that. Anyway. So there's a couple of thoughts in that regard. Let's take a look at what I drew up this morning. You can see that the overnight high was 52.40. The overnight low, our daily low, has been $50.84. That was just after 9 o'clock this morning, after the market opened, 9 o'clock Eastern Standard Time. All overnight was a kind of a slow trend down. I mean, price opened at 51.62, moved way up, and then kind of moved down. So there's a bit of a trading range here. You can see that the movement was down. Now, this is early. I mean, 8 o'clock here. Price moved down the first time. We see these two pullbacks, back to the EMA, back to this trend channel. We had another sell-off down to here. This is right at 9 o'clock. It looked like price was moving even further, but then but when price got down to below just around 50.85, you can see there's a turnaround. Price moved down the first time, pulled back a second time. In this case, you see, when I talk about second entry longs, and I'll probably have to go redo this for individuals who I haven't talked about this for some time. Second entry long or second entry shorts is really the market attempting to do something twice and then just doing the opposite. In this case, we're looking at the price was just weak through all the way through here until it got down to this $50.80, and I don't know why. Maybe somebody's sitting with their finger on the button, and when prices got to $50.84, they decided to hit the buy signal. But you can see price pulled out in the first time, failed, second time. Even though it was a strong move, we had this rebound, pulls back again down to the EMA, and then we go into this pretty tight trading range. Now, when I talk about a tight trading range, what I thought it's a narrow trading range or a tight trading range. Price usually have to revisit twice where the previous low was, and so you can see price pulled back down to here, moved up, pulled back again, and so you can see this is the bottom of the range. And if you look at copy and move it up, let's say the price has to revisit that area at least twice, so you could say that this is the top of the range. We had this breakthrough, pulls back again, and then really price is respecting this area when prices is kind of launched out. So this is where we are right now. It's about 10:30 Eastern Standard Time, and price is moving its way up. Maybe we'll test this overnight high. We can see it's really hanging around. It looks like we had made a run up to this 51.62 area where the price had opened overnight last night. That's just the way that I've got them drawn up the chart now. Haven't talked about the entries. Haven't really talked about where to get in at this point in time. I'm just trying to get back into the swing of things. So we'll talk about more of that as we go along. I had done back in November I was trying to do the slow hand method for price action in less than an hour, like a real quick thing. I think I was going to do 10 lessons in less than an hour or something along those lines. I think I got to lesson 6, and then had some things that came up and I couldn't finish them. So I'll probably have to reboot that. But rest assured right now that I'm back, I'm going to try to be on here much more consistently going forward, because certainly this does help me. I mean, I've been looking at it, and I've been over the course of the last couple months, there's a couple other things I'm going to be talking about as well, as far as risk management and so forth is concerned. But again, we're revisiting the slow hand method for price action. So if you have any interest, please let me know, comments and so forth. I know I've been in for a while, and hopefully my subscribers are going to find some usefulness or interest in this, and then we'll go from there. So I'll see how it goes, and perhaps I'll have a recap later on this evening. Thanks for watching. If you have any questions, please let me know. Bye for now.